Welcome to the September PFS webinar. The topic for this edition is the use of automation tools in accounts reconciliation. To do justice to the topic is Mr. Ojerinde Ademola, an Assistant Director at the Central Bank of Nigeria, and he is joined by Mr. Seyi Oshifalujo, the ED CTO of Precise Financial Systems Limited. The session will be moderated by Mr. Philip Ayeni, the Deputy Managing Director of PFS Limited, and Mrs. Lara Fawole, the Manager Emerging Markets Division at the PFS Limited.
Good morning, ladies and gentlemen. It's yet another day we have here. This is the 6th edition we are having, and as we said, we shared with you guys in the previous editions. We have about programs for the next 1.5 years. And this is going to be a way of giving back to the society, the business environment, some of the things we have benefited in the past 30 years. Okay. And then for today, we want to go straight to business as usual. And today, the topic before us is accounts reconciliation, use of automation tools. Use of automation tools. And to do justice to this particular thing today, are two gentlemen here, veterans in the field. Now, first, I want to introduce to you Brother Demola. Demola Ojerinde is here. He works in CBN as a veteran, has about 30 years experience in business solution automation over the years. Demola, it's nice to have you around. Please say hi to our guests.
Good morning, everybody. My name has been introduced. I'm happy to be here, and I'm happy to share from my wealth of knowledge with everyone here. Thank you for having me, sir.
Yeah, thank you very much, Demola. I need to mention that Demola is an Assistant Director Banking Services Department at the Central Bank of Nigeria. Demola, you're welcome. Thank you very much for giving us audience.
Thank you.
And then the second, thank you, Demola. The second discussant is our own dear super technology. Everything about him is technology. You can see he doesn't put on time. They don't believe in times. So they just believe in talking to the machines, and then the machines will give exactly what they are instructed to do. So confident, so studied, so branded. Their Chief Technology Officer of Precise Financial System, ED, Executive Director, is a member of the board, even the shareholder and Precise Financial Systems. With over 24 years experience, this guy is loaded. Seyi Oshifalujo, it's nice to have you on this particular edition. To say hi to the audience.
Yes, thank you, DMD, and good morning, everyone. I'm happy to be here. I'm looking forward to a very beautiful discussion and a knowledge sharing session with everyone. Thank you once again.
Yeah, thank you, Seyi. And I need to also, mention that my MD is here, Dr. Yele Okeremi. Is the best to speak. You want to say hi?
Yeah, good morning, everybody. I'm very happy to be here, and I wish us a very happy deliberation today. Thank you very much, guys.
Yeah, thank you. And of course, my co-presenter, as usual, my dear lady. She's Omolara Fawole. Fawole, say hi. Oh, wow. Fawole, do we hear you? Okay. And my name is Philip Ayeni. Lara, are you up there?
Yes, I can hear you.
Great. Want to say hi again? Okay, that's right. My name is Philip Ayeni, the Deputy Managing Director of Precise Financial Systems. It's nice to anchor this particular session once again. So we go straight to business. Okay, Molara, you want to start the first sample?
Okay. Once again, good morning, everyone, and you're welcome to this edition of our webinar. And I would like to say that we've been having this series of discussions on accounts reconciliation and other related discussions around it. And this is the 6th webinar we would be having in this series. And today we will be discussing the use of automation tools with respect to account reconciliation. So I will be engaging the participants. I want us to give examples and discuss as we go along. And Mr. Ojerinde, you would go first. I would like you to explain to us in simple terms what account reconciliation means.
Okay, thank you, Omolara. Somebody once said that in the financial industry, everything is okay until that particular time that an error occurs and is not detected. Then every other thing that has been done over the years could be rubbish with just one transaction. So that brings me to what can actually bring out detections of error, and that is reconciliation. Reconciliation is actually an accounting process that compares two sets of records to check that the figures are correct and are in agreement. Mostly in organizations, you have comparison of items in the statements with that of ledger. And it confirms that accounts in the general ledger are consistent, they are accurate and complete before every other thing can be done. And permit me to say that reconciliation is not, most organizations look at it or sometimes relegate it to the background because it's actually performed by a bank office staff, back office staff, and what have you. However, if something goes wrong, even the management of any organizations cannot sit well when error is detected and is unnoticed. So it is a very, very important aspect of any organization, and it can pull down the organization if it is not done as it should be. And like I said, reconciliation is performed typically in the past by back office staff, and mostly it was done manually, which was actually very cumbersome. It was prone to error, and it could even cause undetected items over a long period of time. Thank you very much.
Thank you, Mr. Ojerinde. That was quite comprehensive. And over to you, sir, Mr. Oshifalujo. In your own words, how would you define automation?
Thank you very much. Before I go to that, see, Mr. Ojerinde has done very well in explaining to us what account reconciliation is. I just want to quickly add something a bit to that, that beyond even detection of errors or even fraud, account reconciliation will also help us to explain those differences. For example, after detecting those differences, we also need to be able to explain why they happened. It is in the explanation that will also then help us to put our processes in place to prevent a future reoccurrence of such errors or fraud, as the case may be. Then to the question of meaning of automation, I would just put it in lay terms to mean the technique of making a process or a system to operate automatically. And what do we mean by that? It means to be able to run without human intervention or interference. So in a simple definition, that is automation. Of course, now bringing it to reconciliation, it means being able to do account reconciliation without human intervention and for it to be able to run automatically. Looking at automation itself, we can begin to unpack it. What does it bring to the table? Or how is it even achieved? What does it mean? It simply means teaching a machine, usually only one time, a process of achieving a task. In the process of teaching the machine the process, you also teach it the rules, the guiding rules for that process. Once you're able to provide the guiding rules and you teach the machine the process, usually only once, from that point forward, you expect the machine to be able to repeatedly and consistently perform that same task going forward without need for human intervention. Now, what does that mean? It then means there will be consistency in the process. And of course, because there is consistency in the process, there will be consistency in the output, which is the results at the end of the day. And that means predictability, for example. It means you can predict the stages, each of those stages of those processes. You can predict what the end result will be because you can be sure the system will apply only the rules that you have defined, and that eliminates subjectivity, for example. It means it's no longer subjected to how somebody feels or his or her own opinion. The system or the machine will apply the rule on the facts available, and you can be sure it's going to be consistent. Just like Mr. Ojende also said, it provides for an error-free process because there are very few or even not completely elimination of errors. There can be a case of course, bringing it now to account reconciliation of a debit-to-debit matching of items or a credit-to-credit matching of items, or even simply not matching items that ordinarily should have matched, or matching items that are of different amounts. So we can be sure all of those will be eliminated. Beyond that, you also look at immunity to fatigue. For example, as human beings, fatigue can set in over time, really when we perform the same task repeatedly. Fatigue will come in, there is nothing we can do about that. And when fatigue comes in, chances of errors increase as well. You can also look at greater control. Now, because you are the one that you have defined the rule, you can be sure nothing outside of those rules will happen. Anything outside of those rules, this time will flag them out immediately for you. And then that can then trigger some investigation on your own part as to why there was that non-compliance to the established rule. So those are some of the things automation can bring. And of course, closely related to that, you can begin to look at standardization, for example. You can insist, for example, in the narration, how must it be captured? Narration should not just be payments for supplies of printers, for example. It can be check 001 being payment for supply of printers in favor of XYZ. Once those standards are in place, it makes automation easy. You can be sure chances of error are almost eliminated completely. And of course, the last thing I want to talk about is volume, for example. These days that volume of electronic transactions are increasing, we are more and more embracing the electronic channels of transaction. With increasing volume, ordinarily you will need more human beings to be able to cope. But that is not necessarily the case with automation. You can be sure the system will still continue to cope and deliver on a consistent basis the same level and reliability of your reports. Thank you. That is what has just come to my head at the moment. I believe Mr. Ojende may also have one or two things to add. to that.
Thank you,
Oh,
Mr.
it's
Shifalujo. You have
okay.
done justice.
It's okay, Sheyi. Thank you very much. Thank you very much indeed. It's supposed to be kind of introduction. And of course, the next set of questions here, we'll be looking at the relevance of computerization. This is an in-depth analysis of the justifications for automation of reconciliation exercise. Of course, we know that the processes, the stages, gathering data, different sources, putting them together, automating their internal records, or ERP or banking system, the external records, multivarious external records, you have all that. So the reconciliation matching proper, okay, the ones done by the system, the ones done by you, and then the dissemination of information, segregation of this, all those stages, blah, blah, blah. So we are going in depth, picking one of them. Of course, there are many, 1001 areas, but for limited of time, we're going to pick like 7 areas. And please, we would like us to talk about them just for 4 minutes so that we can have room for questions. Before we go there, let me just mention that please, for the audience, you can send in your question, make use of the chat, for your questions. We'll be able to address them as we proceed. So the relevance of computerization. I'm going to start. Lara, over to you for the first question.
Okay, sir. Thank you. Mr. Shifalujo, you mentioned defining rules. When you were explaining the concept of automation, you mentioned defining rules, then teaching the system to understand the rules. And once the system has been taught, it is expected that the system continues to implement these rules. And that was the summary of automation that you mentioned. But talking about standardization of processes and those rules, could you please shed light on why this is a major requirement for automation?
Okay. Thank you once again, Omolara. Standardization, as I mentioned earlier, actually it's a very broad term. We can attempt to expand it a bit further by looking at what it entails, just as you have asked. I'm going to start with a few things. Of course, standardization means you are defining the rules to start with. You define what must happen, at what time it must happen, and in what format and how it must happen. That means there will be greater clarity and predictability, because you need to understand what you want to automate and you want to standardize. And the only way it begins by even understanding and providing clarity to every step of the process. Everybody must be clear, crystal clear about what must be achieved and how it must be done. It is when that has been done that you can even begin to look at standardization. That's one of that. And then 2, you might also want to look at knowledge retention, for example. Because you have standardized, everybody has internalized those processes, those rules. So it makes knowledge retention to be pervasive in the organization. For example, everybody knows this is how it must be done. It has been codified. Perhaps there is an SOP for it, which everybody must be given on day 1 when they get to that unit. Everybody knows what is expected of them. So there is greater retention. Now, of course, you might also want to look at consistency of quality. I mentioned that earlier. Because you have standardized, a certain report must be produced in this format and at this time, for example. So it's not left to everybody to produce the reports in a way they deem fit or using their own initiative. It is expected it must be in this way, in this format, not somebody producing the same report in PDF, another one producing it in Excel or HTML or text file. It must be defined, it must be in this way. These are the columns that must appear in that report. So that is consistency of quality. And of course, flexibility. Because there is standardization, it makes it easier for you to rotate resource. For example, now everybody is not just boxed into a single unit. You can move people across units. It's not that some resources must spend the entire lifetime boxed into a single unit in that organization. You can move people around, for example. You can move somebody from one unit to another. All they need to give them the handbook, which is the SOP, and they will be able to learn on the job and understand it immediately. So that is standardization in a way. And of course, I'm sure Mr. Ojenide might also have one or two things to add to that. Thank you very much.
Yes, yet we have to actually want to take it one after the other. Sheyi, thank you very much. We want you to restrict to the core point that we want to bring out here, which is process. Now you've mentioned reporting. I would like Mr. Ojenide to actually talk about the reporting aspect of standardization. As a user, why is it so important for us to standardize reports? Why do people talk about the timeliness of reports, adequacy of reports, reliability, and they're talking about so many other consistency, accuracy, blah, blah, blah. Why are these features of reporting so important that automation will enable the users of this report have enough time running the organization, Mr. Ojenide?
Thank you, DMD. Like reports are not just there for the sake of just being there. Reports are actually very, very important in any organization. Why? Because they are is a kind of a means to an end. They are for decision making. So it's not just there. And that was why you can see that even in the banking industry or financial industry, it's not just left to the whims and caprices of anybody. There is an organization called International Financial Reporting Standard. They give the standards for reporting in the financial system. Driving it on, coming back to account reconciliation. Thank you, Mr. Oshibalujo has mentioned so many things about some of the reasons why there should be standard. Anybody cannot just wake up and just say, okay, this is the standard I want. The standard a particular person wants might not actually be fit or even be meet for what the organization actually needs. So it is expedient that there should be a standardized reporting format that is expected when reconciliations are conducted. And when you're talking about standardized reporting, it's actually an intricate type of reporting process that aims to produce consistent, reliable, and actionable information from disparate systems or sources. So we need this information to be consistent. It has to be reliable. It has to be usable by the people or the management that have to use it for decision making. Report is not just there. Report is very, very important. And if there are no standards, everything will turn to Banana Republic, and everybody will begin to churn out whatsoever he or she feels like. However, there are certain things that are expected. When you're talking about standardization of reporting, certain things come to mind, just like DMD has mentioned. You talk about timeliness. Yeah. Why do we need to be timely in our report? Typically, I mentioned before automation, you discover that people pile up reconciliation items to begin to reconcile as at when they feel like reconciling it. And at the end of the day, the purpose of that reconciliation is already defeated. Why? Reconciliation is a postmortem. And once it is postmortem, the best thing is for early detection of error or fraudulent transactions. But if it is left undone for a while, then the purpose is defeated. Recovery might be possible, and it might even totally be lost. There might not be any recovery. So timeliness is very, very important because it ensures early detections of irregularities between the statement of the account and that of the ledger or whatever books are being compared. it ensures that you can identify any unusual transactions caused by fraud or accounting errors. And some of these have to be forestalled even in the future so that such will not reoccur. So automation guarantees timely reconciliation, as bottlenecks encountered during manual reconciliation are totally eliminated. So for any organization that takes reconciliation very seriously, for you to have a timely reconciliation, you need to think about automation. Secondly, talking about standardization, we want to look at the aspect of adequacy. There are certain things that are expected in the reports by an organization. If everybody is just left without a standard, just to do whatsoever you like. Thank God, Mr. Oshibolu mentioned talking about SOP. There has to be a kind of SOP for you to say, oh, this is what you are expecting when reconciliations are being conducted. And this is what the output should be. But in a situation where that is not done, everybody will just bring out anything. Then whatsoever that is thrown out as the output, definitely we include some gaps. So adequacy of reports or reconciliation report is very, very important. And it can only be guaranteed by automation. Because it addresses the requirements and the yearnings of the organization, even for future aspirations. And automation actually brings out the salient items in a report, which ensures that the right thing are actually detected when it is supposed to be detected without leaving it undone. So those things are very, very key. Then we talk about consistency. Consistency. A report can only be consistent when there is a standard. In a situation whereby there is no standard, somebody will bring out, like talking about, Mr. Oshibolu mentioned formats. Somebody will bring out a report in the PDF, another person will use Word, another person will use all manners of things, which is not consistent. And at the end of the day, when somebody is actually looking at some of these reports, you begin to see gaps. This is not what is actually expected, and this is what it does not even is not fit for the usage of the organization. The reliability. Any reconciliation that conforms with the standard should everly be reliable, irrespective of the period. If a reconciliation for a particular period had been done and it conformed with these laid down rules and regulations, by the time somebody, after so many years, is looking at that same report, that report should be reliable. It should be dependable. It should be something that, yes, you can say that, oh, whatsoever that was done in 10 years ago, if I engage people or consultants to even do it now, we will still get the same reports. Reliability is very, very key in reconciliation. And that is why the reporting standard has to be reliable. And just because of our time, let me talk about accurate analysis. Automation these days has gone beyond just giving us, these are the items that are to be posted, these are the items that are outstanding, there are so many things embedded in auto reconciliation. It can be transferred into charts, which are usable tools for ease of comparison or for reports, even into for management decision. Those are some of the things I can mention. Because of our time, let me just stop here. Thank you very much, sir.
Thank you very much, Mr. Jeremy. Before Lara comes in for Mr. Oshibolu, I just want to summarize by saying that, yes, these qualities are very, very important when we talk about automation for reporting. Timeliness, adequacy, reliability, usability, accuracy, actionability, consistency, very, very important. Mr. Demola, look, just very simply, there's this, somebody mentioned, I've had somebody mention that part of the parameters too, requirements for automation, justification of automation, is the ability of the organization to consolidate reports. You know, at times you have various units doing reporting depending on the number of accounts. Some other organizations have over 1,000, and then they have many accounting officers, you know, doing these things. And then the supervisors or the head of the department to be able to consolidate reports and have a holistic picture of a class of reconciliation. So would we say, if there's any word like consolidability of reports as another justification for reconciliation, ability to consolidate reports from various organizations. We have banks that operate on group wide. They are spread all over Africa and they sit in one shared office and they want to be able to consolidate what's my cash position being run by different, maybe tens of reconciliation officers. So we say that ability to consolidate is also part of justification for reporting. Do I have your blessing on that? Because that's what I had.
Okay, thank you very much, DMD. Any organization will, one of the things that signifies whether they're actually moving up or down is growth. So it is a very positive development for an organization to grow. And with this growth comes challenges of consolidation of accounts. Because like you mentioned, some of them are going into groups, some of them are having some subsidiaries and what have you. And when the annual report is going to be processed, all these have to be consolidated. Consolidation using manual efforts is an effort in futility.
Wow.
Is an effort in futility. Because it's going to waste time, it's going to waste resources, and at the end of the day, it will still be error prone. So consolidation with automation is one of the best things that automation of reconciliation process has brought to the financial system. Thank you very much.
Thank you very much. Thank you very much, Mola. Lara, over to you for Mr. Shifalo.
Okay, thank you, Mr. Ojerigi. And Mr. Shifalo, when you were talking about the concept of automation with respect to account reconciliation processes, you mentioned earlier about volume handling. Can you please explain further? We'd like to know how, or let me say why volume necessitates the need for automation in account reconciliation.
Okay, thank you very much, Omolara. Let me start this way. Because of the increasing adoption of electronic channels of payments, for example, let's take a bank. Let's take the area of a bank or a financial institution. What that will immediately translate into, if they must also keep up with timeliness of their report, as Mr. Ojeride mentioned earlier, is that they need to increase head count of the people working in that unit. Because obviously they have the same worst case scenario, or if you like, best case scenario, the same 24 hours to be able to accomplish the same task on increasing volume of transaction. So since time cannot increase, it means you can only increase the resource that are assigned to that task, which means you might then begin to look at increasing head count. Okay? Now, when you do that, which is a way to go for some people, you are also then inadvertently creating some other problems. Because as you increase the head count, you are inadvertently increasing the chances of error. Because the more people that work on it, the higher the chances of any number of them committing errors during the process. And when errors increase, it means you are eroding the reliability of the report that Mr. Ojeride also mentioned earlier. So it means the report begins to lose credibility or reliability, simply because you are increasing the number of resources that are doing the process manually. Now, the way to go, excuse me, is to automate. Because when you do that, it means you don't necessarily need to increase head count to be able to achieve the same consistency in the level of reliability, the same consistency in level of performance, excuse me, and also you will be able to ensure that the process remains error-free. Remember, one of the definition or advantages of automation is that I can be sure that the rules you have defined are applied on a consistent basis by the system. So it doesn't matter the increasing volume, the system will be able to cope with it. You can imagine, okay, let me just describe it this way. In a unit of, say, 200 people.
Can you make it 15 seconds more?
Oh, okay. I know we are pressed for time. But I just keep it that you can be sure that the single machine can perform in about 2 minutes or less the same task that about 200 people will do in 1 hour.
Correct. Wow.
Yeah. Thank you.
Yeah, thank you. Thank you. So volume, so your computer is not afraid of volumes. Because you want to describe the rules, the system is happy to go ahead. Thank you very much. Lara, go ahead, please.
Mr. Schwager, you mentioned something about, let me just chip this in. You mentioned something about no need to increase head count. So from experience, some people hear automation, the first thing that comes to their mind is decrease in head count. So how do we balance that? How do you convince the management? How do you convince them that this will help your process without necessarily creating fear in the existing officers? Now, you mentioned that in 2 minutes, the system can handle 200,000 transactions. And whereas you have 14 people. So when we hear automation, the first that comes to their mind is, oh my God, something is going to happen. So how do we balance this? How do you convince the management that this will help your processes? And how do you at the same time allay people's fear? Can you just tell us how to handle it in like 30 seconds?
Half a second.
Okay, yeah.
You see, it's a dilemma oftentimes faced when you are introducing automation to just about any system, not just including reconciliation. Typically, automation will take away some job. We can't escape that, but it also creates others. But one good thing is that it creates opportunities, frees up those resources to be deployed to other more productive areas. Instead of them being down in that unit, you can find other roles for them where they will remain useful. And at the same time, at the organizational level, you can be sure that you are in a better position. Just like Mr. Jerry said, immediate detection of errors and fraud. For example, you don't have to wait for 3 years to discover that something happened 2 years ago that was not detected as at that time. Thank you.
Okay, so thank you very much. So what you are saying in essence is that we create capacity. We don't create unemployment. Thank you very much. Lara, next question.
Okay. Mr. Ojeride, when performing different reconciliation functions, there are different duties, and there's a way it is distributed across different officers. I mean, when you segregate duties, yes, I know that people can achieve that manually, but can you just explain to us how we can achieve this segregation of duties by automation with respect to reconciliation?
Thank you, Omolara. One of the most important benefits of automation in reconciliation is still this aspect of segregation of duties. In the financial industry, segregation of duty is very important so that not just one duty is being performed by one person from the beginning to the end, so that without consulting any other person, that particular guy can be the all in all in that aspect of transaction. So be that as it may, for manual processes, segregation of duty, you can say it is easier. However, even with automation, segregation of duty is possible. And we have experienced it even in our own processes. Segregation of duty is a very, very important thing because it's a basic building block of sustainable risk management and internal controls for businesses and organizations. It's very important for risk management. So this principle of segregation of duty is based on shared responsibilities of key processes, especially critical functions of that processes, to more than one person or more than one department. Driving it home to automation. In our own system now, the system are so segregated in such a way that right from the uploading of items into the system, access can be given to certain kind of personnel to do that. You understand? Where the matching and every other thing will still be done by others. It's a kind of process flow. You understand? It flows from a particular person that starts it, but it does not conclude it, to another person. And at the end of the day, the review of whatsoever has been shown out as a product of that reconciliation will be done by somebody that is senior to this category of staff that have done it, so that there can kind of be tests of what had been done or what had been concluded, whether it was actually done well, whether rules are adhered to, and whether the final product meets what is expected by the organization. So even with automation, as it was done during manual processes for segregation of duties, automation has been able to achieve that segregation of duties even in terms of reconciliation, and so also in other processes that have been automated. Thank you very much.
Thank you very much.
Thank you.
Yeah, thank you very much, Demola. Now, Sheyi, because of time, I want you to do two things together for me, okay? And you've got to do that within 3 minutes, okay? I want you to talk about the need for a supervisor to truly supervise. How automation will serve as the ideal tool for him. And then, of course, you relate this, you mentioned it earlier, with errors and frauds. How that will be done, supervising to avoid errors and frauds. How automation will be an ideal tool in an organization. In 3 minutes, please.
Thank you, DMD. I will start by saying, what is even the job of a supervisor in the first place? The job of a supervisor is to ensure that everybody does their job the way they are expected to do it. That means they comply to the laid down rules and follow the laid down processes. That is the primary job of a supervisor, to keep everybody in check, and also to ensure that everybody works in a way that the expected result is achieved. Otherwise, there will be no need for supervision. So those are the key roles of a supervisor. Now, bringing it down to account reconciliation, how does a supervisor achieve that? A reconciliation tool can help the supervisor to do that immediately by immediately flagging and detecting non-compliance.
Yeah.
Because the system will be able to detect outstanding items. Maybe the narration was not well captured by the posting units in conformity with the laid down rules. Certain information that must be captured are missing. Automation will immediately detect that, because such items will not be matched off automatically, so they will stick out as outstanding. And that can then trigger the supervisor to go and take that up with the relevant unit or officer that was doing the posting. Why were you not posting in line with the agreed processes or formats? So that has enabled the supervisor to do that. So you can detect non-compliance immediately. So an automation can allow you to do that. And you can imagine if one has to do that manually, it would be a nightmare to such supervisors. Then the other angle to it is,
you can say, Sheyi, sorry to come in. If the supervisor will now be able to really supervise and look at the people generating the entries, it also means that the supervisor is also in control of what the reconciling officer is also doing. So that means that he has set the rules and is able to ensure that this reconciliation officer will not match anything that the supervisor himself will not match. So
absolutely,
he is actually in control of the same process. So it has a dual benefit, right?
Absolutely. Yes, absolutely. You are taking some of my minutes.
Okay, I'll give you 10 seconds more.
Okay, now the error detection. Of course, Mr. Ojerinde also mentioned something like that in his earlier presentation. Of course, there can be accounting posting errors. We assume it was done inadvertently, even though the general rule is that we trust nobody, we only trust God.
Yeah.
So what was presented as an innocent error of posting will actually be a fraud. Will actually be a fraud. Yeah, and you can imagine what will have happened if such is not detected immediately. Now, look at a situation where maybe I'll use a bank, for example, or some other financial institution. You go home at the end of the business day, and before you come back the next day, the automation tool has downloaded all the transactions of the previous day. It has automatically matched them for you, and it has generated the reports, and will even have emailed those reports to you, which you will have seen while you are still on your way to work, or by the time you wake up on your bed in the morning, you have seen the report of yesterday's activity or transactions. Some things will catch your eyes immediately. Why, for example, is this item outstanding? Is it that it was not posted on the other book, or was it not even supposed to be posted at all? That would trigger some investigation process on your own part as a supervisor. It might just be the detection of a fraud that could have been going on before the introduction of automation, for which automation has immediately brought to your attention. Now, in fact, let me just paint a scenario. I will take my 10 seconds now to paint a scenario. I remember there was a time we were at the bank, and then we wanted to automate their reconciliation process, for example, and then the system was flagging some exceptions, and they wouldn't take it. And we told them there's a problem with your book. They didn't believe, but we had to sit down, create a workshop. We spent hours, manually download the details of the GL, get the balances, we manually computed it. I will find out, you won't believe it, the banking application was keeping wrong balances on those accounts. The balance table does not agree with the details, and that is in a banking application for a bank in Nigeria today.
Wow, wow, wow.
But it was automation that was able to detect that. Thank you very much.
For 10 seconds, gone. Oh.
Thank you very much.
let me just, because I still need to bring in my MD. All right, but let me chip in this. I had this from a client at the time, and I took note of it when talking about frauds. Okay, and he said that one thing he enjoys in automation is that he has a trail of what has happened in the reconciliation process to every item in the two books. If they are matched, he can trace the trail. So there's a trail. You can trace back. You can investigate. But if it is not automated, whatever the guy has matched, he has matched it, and you are simply a believer. He said that, well, he's not a believer because his name is not Thomas. Thank you very much, Mr. Oshifalujo. Lara, please, can you move on to the last question, task question 6, for Demola in 3 minutes?
Okay, Mr. Ojerinde, I'm going to, even though you say it's the last question, I'm going to do like a two-in-one question. Okay, yes. So talking about the environment for automation, what are the things that need to be in place for an organization to say, okay, we have the right environment? What are the requirements? And I also like to chip this in, even though we have human resources, we have people, that are already working on accounts in different units. How, even though we have automation is in place, how do we ensure that we don't rely too much on human? We are aware that during the reconciliation process, there's still need for human intervention, once a while to check, to investigate, to make sure things are in place. So how do we ensure that we don't rely on humans 100%? We've had situations that people don't go on leave, people don't get redeployed just because they're reconstruction officers. They don't, they don't get the necessary break that they need to get. So how do we ensure that we don't over rely on humans? And at the same time, how are we sure that as an organization, our environment is ripe for automation? What are the key requirements?
Thank you very much, Omolara. Now that you are giving me double barrel questions and you are going to answer in 3 minutes.
Yes.
All right. Let me quickly do justice to it. Okay, let me start from the second one. Right? Sorry. So talking about over reliance on human resources, just like we have been mentioning, and every speaker has done justice to this. Reliance on human resources is prone to error, whether we want to like it or not. Human beings, we are limited. Fatigue can come in. Your state of mind can be off for just 1 or 2 times. Do you understand? In the course of reconciliation, we can pose serious danger to what is being done. And the only solution to reliance on human resources is purely automation. No 2 ways about it. If processes are automated, if reconciliation is automated, reliance on human resources will be reduced to a minimal level. And this will give a positive development to the organization. And like some of the speakers have mentioned, the fact that a particular automation has been deployed does not mean that people will be sacked. People can be redeployed to where they are best suited, which at the end of the day can equally increase the productivity of the organization. That is about that. Because of my time, let me stop at that. Now, quickly, I want to talk about establishing relevant environment for automation. This topic cannot be exhausted, because I tell you, the first thing that you need in any automation is the management buy-in. If the manager does not buy into whatsoever you are bringing in as an expert or as an idea or whatever, the idea is DOA, dead on arrival. DOA, because it's not going to work. You need management buy-in because it will set the right environment for the automation. Then going beyond that, if there is a management buy-in, there has to be a kind of serious awareness among the staff to get their buy-in. This is what we want to do. Nobody is losing their job, but it is just to increase productivity so that everybody, all of us, can be on the same page. We can sleep with our 2 eyes closed. We will not go, there were times in my organization when you are going to office, you tell your family, I don't know whether I'm going to sleep in Panti today or Alagbo, but just pray for me. Do you understand? However, because of automation, I can authoritatively tell my wife, say, okay, I'm going. By evening time, I'll be home. I'll be back. You understand? But those days, the reverse was the case. You can't say it with all your mouth that definitely I'm coming back. You are not sure. But because of automation, some of these things are being reduced. So the staff awareness is important. Then there has to be a kind of capacity development for the staff too. Because when you are bringing new technology, people need to be trained. They need to be adequately trained to know how to use that particular facilities, to know how to use that particular automation, so that everything can be seamless. There are going to be a transition from a manual process to automation, and it has to be seamless. There is not going to be a kind of a stop or a gap. That has to be, we'll be thinking about fixing in the future. And the lesser part of it are the availability of materials like computer accessories, the right technology, the right software, the right information system, and all that that we can think about. I hope I've not spent more than my 3 minutes. Thank you very much.
Loaded. That's wonderful. You see, there's a constraint here. That's the constraint of time. And we want to stick to our 60 minutes, actually. And it's very, very important. Before I go to the last question, there's a question here from the audience, which I will also want Mr. Jerry to answer. Half a second, actually, in half a second. What's the difference between account proof or account proofing and account reconciliation? Okay, and what is it that account proofing will achieve that reconciliation does not? So what is the impact of automating the two? Are they two separate? Is one coming after the other, or is one, accommodating the other, or is one embedded in the other, or is one, actually adding value to the other? What are they? Account proofing and account reconciliation. Half a second, Mr. Jerry.
Yeah. Okay. The two are together one way or the other. Why? Because account proofing we could be limited to just one account, and you are trying to test the authenticity of the items that are therein. You understand? Yes. However, when you're talking about reconciliation, you are comparing books.
Yes.
Comparison of books. You understand?
Okay.
That is what it is. However, there is none that can be done without another, because all of them are to achieve the same goal.
Okay, fine. We probably have to give this question another audience attention in this edition, because I have less than 5 minutes and I want to quickly do two things. Okay, lastly, let me bring in the MD, Ayele Okeremi. Please, you have something to tell us in 2.5 minutes, because I have another question for 2 minutes, so I want to give you time. MD, Dr. Ayele Okeremi, over to you, please.
Yes, thank you very much for letting me speak. I'm not going to speak so much, but I want to appreciate the.
But MD, you have promised that we are not going to speak so much, right?
Yes. So
I'm only trying to remind you.
Appreciate the facilitator. I just want to appreciate the educators and the audience too. And I trust that this is impactful. This is what we do. From time to time, we share our experiences, we share knowledge to create a virtual system and make it clear that we are actually back what we can think and we can solve our problems. Thank you very much.
Wow, wonderful, MD. Thank you very much. In fact, you have actually, I'll be disappointed that. Thank you very much, MD. All right. Thank you very much. Yes, the last question, and this will be for both Demola and Sheyiwa. We are closing. And that is that, look, key consideration in automation. What are the factors mitigating against reconciliation? Why are people running away? Despite these advantages, these benefits, why are people still running away from automation of reconciliation process? Sheyi, in 1 minute.
Okay, I will, within 1 minute, I don't know how I can do that, but I will try. You also need to look at the understanding of the process to be automated in the first place. Because without a clear understanding of process, people don't see the need of automation and they don't even understand what they need to automate. I will also say, of course, when you're automating, most of the time, if not all the times, you also need to review your current IT infrastructure, which may not be sufficient or adequate to support your automation. So sometimes you might need to look at the cost. So part of the question is that you need to know that you might need to invest a little bit into infrastructure. And also, when you are choosing the tool, you also need to look at a few factors. For example, the tool must be flexible, it must be simple, the simplicity of it, and must be usable to the user. Earlier, Mr. Ojenide mentioned the executive buy-in, which is very key. Also, if it frustrates the end users, they will simply reject the usage of that tool, and that will defeat the entire purpose of automation. So to the users of the tool, they must see it as flexible, they must see it as simple, not overly complicated, yes, and must be usable to them. Thank you very much.
Thank you. Thank you. So, Johnny Day, 1 minute.
Okay.
Why are people still running away from reconciliation despite all these advantages?
Yes, people will run away from reconciliation because some people actually believe in many organizations that is only people that they don't, because, so to speak, in some organizations, they don't give it adequate recognition, reconciliation as it were. They don't give it adequate recognition. They look at it as, something that is an ad hoc thing, you understand? And like I mentioned earlier, everything is right until something is wrong. Do you understand? And, the processes of an organization, nobody value it, but one transaction can bring a whole organization down. Wow. So there has to be an adequate recognition by the executive and the management of any organization for reconciliation, because it is very, very key. And the effort of people that are doing this reconciliation should be recognized. Don't treat them as like, oh, they are just part of the crowd. Reconciliation is very, very key. Imagine you hear today that, oh, a particular organization, $1 billion is lost. And this could be as a result of inappropriate reconciliation. Do you understand? Yeah. And that is why reconciliation should not be seen as an ad hoc, but it will be seen as a serious business. Thank you very much.
Business. Okay, thank you very much. Thank you very much. Willingness is okay. So we're going to round up now. Thank you. I want to thank the audience for this moment. Sorry, we had to rush some things, but by God's grace, next month, around October 20th, we'll come with the seventh edition. And until then, we want to say thank you very much. And to our discussants, Sheyosh Farujo and Ojeri Deolale Demola, I want to say very big thank you. MD, thank you very, very much. And Omulara, thank you very much. And I want to say kudos to myself too. I think it's not out of place. Thank you very much, everybody. See you next month. Thank you. All right. Bye-bye.
Thank you for listening. The next webinar is scheduled for October 20, 2022, and it's titled Effective Accounts Reconciliation, First Things First. Registration details will be available in the first week of October.